Hashtag.
Yo, what's up, everybody? So I just wanted to hop on here and do another daily review for what basically occurred, what I was looking for, and how everything played out. So let's actually go to my journal real quick. So this sell-off, as you can see here, I had it anticipated before it occurred, and I actually put a small entry in. But as you can see, what happened, 6:30 comes around and gives us that wick. The mistake I made on this was trying to basically use this fair value gap high at first. Originally, I had my risk right here, but I was like, let me just put it up here by the bodies of this candle or these candles. Maybe, maybe it'll just wick above these highs, take the buy side liquidity there at 6:30 and then continue falling lower. But unfortunately, price rallied up higher, took me out by like a couple points, maybe one, not even a point. And yeah, it just ended up tanking, falling off the planet. So the logic behind this, let's go to some of the other time frames real quick. Oh shit. Okay. So yeah, the logic I used behind this was the fact that we have been pushing higher. We're engaging buy side liquidity. Overall higher time frame bias is still bearish on the weekly chart. Okay. Just like in the other video, let's go look at the weekly chart. What's occurred here? Okay, remember what I said in the last video, how when there's a fractal high created, a lot of times the next couple candles we can expect to go in that direction. Like this is a fractal high, the next couple candles could be bearish, even if it's going to end up turning around and being bullish, because it has to reach down for something. So as you're reaching down inside this order block, so and we're bouncing off of this weekly order block as well, this bearish order block. So that's still the logic that I've been going off of, higher time frame bias wise, right? And obviously it's been playing out properly, doing what I figured it was going to do. Okay. So on this daily chart, we also see this fair value gap here. So price is pushing lower into that. If the midpoint of this fair value gap is broken, that's going to be even more confirmation that this was just a stop run. And until I'm proven otherwise and price takes off to the upside, I'm going to remain on the side of the weekly time frame bias. Okay. So with that out of the way, all right, let's go to these other time frames. We can see that there was clean equal highs above here. So what did price do? Going into New York session, basically price rallied higher to come and engage buy side liquidity. So right when that was happening, I ended up looking for some reasons to short. Okay, so that's the logic from here. There's also equal lows down here as well, these lows here. And that's also the London low. Okay, so something really important you guys want to understand. Let me go over to my notes real quick. Let's open this real fast so we could talk about this. So essentially, this is what I'm marking on my chart, or at least like it's a template that I use, okay, for intermarket relationships, understanding risk on, risk off, and how that applies to us making decisions, different things that I look at to get an overall view of how the market is, like what the market condition is currently. And then basically, this is how I basically look for liquidity, right? So the key that I want to talk about here is the specific things you want to mark up on your chart, or at least the things that I mark up on my chart. This isn't like me telling you what to do or anything, but you know, this is just what I do, and it's served me well based on what ICT has taught me. You know what I mean? So I always mark up the Sunday's open price every week. And then look for your premium discount levels on a higher time frame. I always mark off the London high, London low, previous day's high, previous day's low, previous week's high and low, and then the midnight reference point, which is 9 p.m. Pacific time. Okay, so that's the daily open. So the weekly open and the daily range open, those are your things that you use for Power 3. And you also use the equities open at 5:30 and 6:30. You use that also for Power 3 dynamics if the midnight reference isn't applicable. Like say price ran too far from it and it's like kind of a good distance away. A lot of times it's not going to use that. A lot of times it'll just use the equities open price level for Power 3, okay, for the daily range. Sunday's open price is basically the same as this, but it's using a higher time interval. So it's like it's for the weekly range Power 3. So that's what Sunday's open price is for. And then of course the midnight and equities open, those are for the smaller interval Power 3 dynamics. Okay. So with that understanding, okay, let's go look at the chart real fast and see what exactly occurred and whether what I just explained is useful or not. Okay, so we can see we gotta keep in mind previous day's highs, previous day's lows, previous week's highs, previous week lows, London highs and London lows for previous session. Okay, so what occurred? So here's the opening for the daily range, which is at midnight or 9 p.m. Pacific time. Price came up above it, then came back to a discount, then rallied up once more after it left these equal highs here. So it engaged those equal highs once, which you could have looked at this as some type of entry and then probably took a loss there. Okay. And then it rallied one more time, creating an SMT divergence. Just like in the last video, there was an SMT divergence created before the significant price move or the main price move occurred. Okay, so let's go look at what that looks like. So here's the SMT here that I was just talking about. Okay, you could see how this also had a lower high here as well. So with that being said, I used that as a timing tool this morning to time the trade. And then once we scroll down to these lower time frames, we see how there was two equal lows here and their fractal lows. Price energetically crushed through that. So here's the first YouTube model entry after 5:30 a.m. Pacific time or 8:30 Eastern. And then as price just kind of took a long time to do anything, right? How it was consolidating. Once 6:30 came, we were already pushing lower, shifting market structure more. Then 6:30 came, rallied up, took us out by less than a point. You know, a rule for this scenario, how could I have improved this? I could have just put my stop above the high. I mean, it's not even that many points. I was trying to be too precise. And that happens, you know what I mean? Like we can't be perfect. But as you can see, the rest of the narrative that I had laid out for myself basically came to fruition. This is not a trade I sent to my community. I just feel like this week is not the best week. So I'm just basically doing things, you know, keeping my students safe, and anyone that is looking for signals from me, I'm making sure they're safe, and we don't engage with the group unless there's things, you know, that are trustworthy and good conditions. Not that we're in terrible conditions right now, but we're towards the end of the year. You know, there's less smart money in the marketplace because they're probably on vacation right now, trying to hang out with their families and stuff like that. So in these times, like the last 2 months of the year, you want to be very cautious. You want to lower your risk, and you don't want to overdo things, because if you overdo it and have a bad November and December going into January, that's going to weigh on you, and you don't want to have to deal with that. So slowing down towards the end of the year is ideal. You know what I mean? Doesn't mean you have to you don't have to, doesn't mean you shouldn't trade and that there's no opportunity. It just means, you know, you got to be smart about what the hell you're doing. Okay. You got to understand when times are not the best, and when you should pour it on and when you should take your foot off the gas a little bit and be more on a preserve capital mindset. Okay. And that's what we're in right now. But as you can see, once price ended up breaking this low, because this is the swing that started this sell-off, you can go from this high to that low or to these lows here. You can get a projection. This is ICT's swing projection technique. So there's that. And yeah, so there's also an order block here as well. Price returned back to that, offered another entry. Here's another order block, price returned to that, offered another entry. Here's a fair value gap. Price will likely reach up into this and then sell off if it's going to continue, or it's just going to use this order block here and just leave that open as like a breakaway gap type scenario. Okay, so yeah, I think that is about all I wanted to cover in this video. But I hope you guys were able to kind of see my logic and understand why I took this sell. I hope you guys can also appreciate the transparency, right? Because people ain't going to be showing you losses and dissect why they lost most of the time. So there's that. And yeah, so I hope you guys, like I said, got some value. If you guys like the channel or any of the content I post, if you could like, comment, and subscribe, I really appreciate it. It helps the channel out, lets us reach more people, stuff like that. So, but yeah, so I hope you guys have a wonderful rest of your day. And I hope you guys remain safe throughout the rest of the week. Remember what I just said, you know, kind of lower your frequency, right? Lower your risk, you know, because it's the end of the year. We have a whole another year next year that's going to be fruitful with opportunity because there's going to be a whole lot of shit happening. So yeah, I hope you guys have a good rest of your day and a wonderful rest of your week, and I will catch y'all on the next one. Peace.
Hashtag.